I would now like to invite Mr. Hasham Piperdy to speak on RI trends after the floods.
Come on stage. All right, hi. Good morning, good afternoon, everyone. You get the presentation up? All right. Okay, so for the next 20 minutes or so, going to be taking a look at the reinsurance market. And I know it's been a while since the floods, but just taking a high-level look at, what's the status of the market? What are the high-level trends on the RI side in UAE? Okay. But first off, I want to switch to Menti and just ask you a question. So Mirza, can we have the first question? Right. So how big is the UAE RI market? I'm looking around to my friends in the RI. Actually, I should have been a bit more specific here. But look at overall markets, so P&C and life and health. I think we've got a decent number of, let's have a look in the interest of time. Okay. So, over 30 billion. Actually, according to UAE, the size of the market in the latest report, 29 billion overall. You guys know the market. Just, let's flick to the presentation. But if we zoom in on, it's very hard to cover the whole market in 20 minutes. So I'm going to focus on motor and P&C for now. And of that 30 billion, if we look at motor and P&C, it's actually about 16 billion and rising. And if we look at the split here by line of business, so fire, about 6 billion, 5 billion. Then you've got marine, motor, about 2 billion, engineering, about 3 billion, and other P&C. So that gives you a sense of the scale and the importance in the market. And zooming in terms of commercial lines, the split between national and foreign I find interesting is the way that CBUAE published the results. But if we go to the right-hand side, you can see the overall market size. So fire makes up the bulk of RI in UAE, about 5 billion. Okay. And the next one, looking at, some of the financial metrics. So looking at the so I want to start with the status of the market and then look at, what some of the trends and what's happened pre and post flood. And also try and get some feedback from you guys as well on what's been happening on your renewal. So in terms of combined ratios, this is for 2024. And you can see that, if we look at the 100% scale, you can see the bars have been spiking for the lines affected by floods. So you've got property, so you've got fire and motor spiking well above 100% there. And in terms of the split between FAC and treaty, again, we'll look at the mix and how this has changed over time, but it's fairly steady in terms of, and pretty much as expected. So again, looking at commercial P&C lines, pretty much 50-50 in terms of FAC and treaty, very much driven by the nature of the risk. The other thing I thought I'd look at, I did have names here, but I was told to take them out because this may be confidential. You probably guess who they are. But one of the other points, thinking about concentration risk. Now, I remember when I started working at Willis 20 plus years ago in London, I was told about the what was it called? The London Market LMX. I don't know if you guys have heard of that. London Market Excess of Loss catastrophe, which almost brought down Lloyd's. And what was happening was every syndicate was reinsuring their friends. So this table would reinsure this table, reinsure this table. There were some huge nat cats, and also man-made cats, oil rigs, which meant this table reinsured, and it went down to a circle, and it almost brought down Lloyd's. So concentration risk is real, but actually it's a very diverse market and competitive market in UAE. So if we look at the top 10 reinsurers, so the largest market share is only about 6-7%. So very diversified in terms of spreading of the market risk. Okay. So before we get onto market trends, Mr. Menti? I want to look at a few things. First off, what's the trends in retention session in the market by line of business, and also some of the financial targets and KPIs. So if we could do the second question. Yeah, retention, yeah. Okay. So just getting some feedback from the room, and it'd be good to compare with what we have gathered from our research team. So just very quickly, with the sliders, what's your business's target retention, or what's the strategic retention for these lines? Okay, it's not displaying the way it should, but it should be from 0 to 100, hopefully, on your screen. %. Okay, about 50%. 40 to 50 for the commercial, commercial P&C, and then, okay, general accident, 47%, okay, about there. All right, it'd be interesting to, I'll show you the actual statistics for the market. If you flick back to the presentation. Okay. So if we look at actual retention, so it seems like you guys are a lot more bullish in the room, want to retain a bit more business internally than seed it out. So a lot of you were pushing for 40, 50%. Whereas what we're actually seeing in the market, so if we start from the left for fire, so the bars go by year, 23, 24, and 25. And what you can see is from 24 to 25, so for property, you can see an uptick in retention. There was a drop, so the middle bar is the median, and then we can see the spread of values widening quite a bit for 2025. So there is an uptick in retention from 10 to about 15% in fire. For the other lines, there also seems to be an uptick. Apart from general accidents, the spread is increasing, but we're not hitting the aspirational 40-50% that you guys had earlier. For motor, pretty steady, about 5% increase actually in comprehensive. So comprehensive makes up 90% of our market here in UAE. But slight uptick in retention for comprehensive as well by about 5%. Okay. The next few questions, again, if you flick to Menti. So I want to get your views on financial strength and financial strategic targets. So 3 things: solvency, return on equity, and target profitability and combined ratio. So what's your strategic target for solvency? I can't remember what scale I put up, but I didn't allow it to drop below 100. Let's have a look. Amazing, about 200%. Fantastic. That's about, and I'll share in a minute, majority of the larger companies are around that mark. Awesome. Next question. Return on equity. So what's a reasonable strategic return on equity target, or what's your target for your business? It's such a contrast doing this in a mature, developed market compared to some of the other markets in the region. %. Fantastic. Okay. And last question on profitability. So target combined ratio. And then I'll share with you the stats that our research team have gathered for the market. Yep. Although there seems to be a hump at the left as well. But yeah, okay, 91%. Let's flick back to the presentation. Okay, let's see what the actual numbers are. You guys deserve a round of applause because you're pretty much bang on. Okay, so for solvency, these are the a sample of the largest, so this is just onshore listed companies. So if we take the largest 10 and look at the trend for solvency, actually, if I skip to this one, probably a bit easier to see. So it's been about 200%, which is what everyone in the room is targeting. Majority of people are targeting. It's come back a little bit. There's always some fluctuations with mid-year numbers, but about there. I'm going to skip this. Right. ROE. You guys were a bit conservative, but yeah, it's ranging from 10 to 15%, with 1 or 2 exceptions. I think we know a few companies are struggling, but around 80% of the largest companies around have been in the 10 to 15% range over the last 3 years. Okay. Investment yields I shall skip. Yep. The other financial metric I wanted to look at was liquidity. So solvency is solid, but in an earlier slide, a lot of compared to other markets, we really sweat our investments in UAE to drive higher investment returns, especially if we have a healthy solvency position. And there was a bit of strain on liquidity last year, obviously, with the flood claims. So if we look at the cash to liability metric, you can see the bar dropping sharply from 23 to 24. But it looks like, we've got a strong recovery in 25. So things are looking promising. I want to finish off then looking at rate changes and get some feedback from you on what you're seeing in terms of post-flood renewals. So if we can flick to Menti and look at those renewal questions. Okay. So first one, post-flood renewals. Yeah, just some feedback on what you did. Just very high level, up or down in session. Interesting. Okay. Because from the earlier bars, it looked like there was actually an increase in the session for a lot of companies, especially in the impacted lines, in fire, motor, a little bit in engineering as well, but not that significant. Okay. Next question. Okay. So for these three items, right, there's just a simple slider. Did the rates or the coverage or the commissions reduce on the left-hand side or increase on the right, or stay similar in the middle? Okay, let's have a look. RI rates went up for the majority, yes. Okay, interesting. So coverage stayed similar. Most of you negotiated well through your brokers. And commission stayed similar as well. Okay. Surprised at this, but if this reflects your experience, I'd be interested to hear from those of you in the room, because overall the research looks like, yes, RI rates did increase, but there were also restrictions on coverage, especially sublimits for cat, that sort of thing. And you did well to negotiate the same commission. So again, observations slightly different. If we flick back to the presentation, so let's see what we actually saw in terms of the premium rates and the profitability for RI. Just closing up on this. So if we look at average premium rate changes in the market by line of business. So yes, most of you saw quite large increases. So for property, for fire, increasing trend. Now this is an average rate increase, so it could reflect changing risk profile as well as a caveat, but at the end of the day, it still should give a broad indication because it's across the whole market. And so the sharp increase in fire, the other lines ticking up a bit, not much movement in energy. Okay, motor, as you saw earlier from Mirza's slide, and Ali also mentioned on the comprehensive, the market did react, large increases in our premiums. slightly smaller increase for third party. And then finally, what did this mean in terms of profitability? So this looks at by year, a bit of a busy slide, but by line of business shows how much support or profitability we're sharing with our reinsurers. So if you look at the negative bars, that's from the reinsurer's perspective, reinsurers absorbing the losses. And you can see in 2024 in fire and motor, and to an extent in engineering, construction, some pretty significant hits with the reinsurers supporting the market. But so the black bar is 2024 and the yellow bar is 2025. And if we look at the scale, the profitability has bounced back, but this is essentially the purpose of RI. So it looks like premium rates, reinsurance rates, more than covered in many instances a lot of the losses that were made. And you can see, for example, from the minus 100% in 24 to plus 100% in 2025 so far. And similarly in motor to a lesser extent. So RI has served its purpose. I'm going to wrap up now. Covered a lot of material and we have a lot more research that we can share. But, in terms of closing thoughts, the floods were not priced. We didn't price them, cedents didn't price them, nobody priced them. But RI served its role and supported the market with a 2 to 3 billion estimated US dollars of losses. The hardened rates are there, and all of you, majority of you saw hardened rates. But it appears that, the RI rates have hardened a lot more compared to the gross rates being charged relative to the gross rates that, we're able to charge in the market. And it was interesting when the room was saying that we've managed to negotiate a similar coverage level. That's not been our observation, but maybe this could be isolated cases that our research team have looked into. We are seeing reductions in coverage, and in particular on the cat side, reduced, reduction in sublimits. And a couple of questions, thoughts for the future, right? Given the state of the UAE reinsurance market and what's happened, and the strong solvency levels that we're seeing, we've all got 200%. Do we have scope to increase retention more? You guys certainly feel, we're running at about 20%, for example, for fire. But everybody in the room thinks a sensible strategic allocation is 40 to 50%. Now, with such strong levels of well-capitalized insurers in the market, is there scope to increase retention, perhaps? And also, given the way the market is increasing, we don't just write business in UAE, we write across the region. We're seeing an explosion of interest in, for example, in Saudi Arabia, for the specific reasons for that. But is there more scope for more reinsurers to enter the UAE market? I'll leave you with those thoughts, and happy to take any questions. Thanks, everyone. Yeah. Okay, we're going to wrap up in the interest of the time. Thank you.